Good morning, everybody. Welcome to today's 1 million by 1 million online rendezvous. This is Sramana Mitra coming to you live from Menlo Park, California, in the heart of Silicon Valley. We are just off Sand Hill Road, which is the famous street where all the venture capitalist offices are, so you may be aware of this name. And it's kind of like a windy winter morning here. Colors are changing. You may be surprised, but in California, in the middle of Silicon Valley, we actually get beautiful fall colors in this little town of ours. We have a lot of maples and a lot of pear trees. I have a pear tree right in front of my window, which turns completely yellow and then completely red. So that's what's happening here. It's quite cold. It's getting colder. And unfortunately, not in California as much, but in the rest of the US, in a lot of Europe, the pandemic is rising this winter. And it's a tricky situation. It's a scary situation. So I hope sincerely that all of you are staying safe, keeping your loved ones safe. So, throughout the pandemic, the last 8-9 months, we have tried to maintain as much normalcy as possible. And these rendezvous, plus our online roundtables that happen on Thursday mornings, 8 a.m. Pacific time, where you can bring your project and I will review your project, brainstorm with you on your strategy, what roadblocks you're facing, and so forth. All of these have been continuously on. We have not taken any break. We have not put any, gap in our schedule. We have continued to bring you our normal programming, and here we are. Today we'll do the same thing that we've been doing in these sessions. We will do Q&A. So these are startup-related questions and answers. Remember, we only do technology startups. Information technology is our domain, but within information technology, we do everything. We do online education, we do cloud computing, artificial intelligence, big data, Internet of Things, e-commerce, healthcare, IT, you name it, we are comfortable handling all of that. And outside of our domain, we don't handle any of it. So we get a lot of messages after these sessions in particular, because this session has such a wide distribution, both internationally, geographically, as well as domain-wise. We don't do, for example, pharmaceutical drug discovery. That's not our domain. We don't understand it. If you're doing some technology, information technology, to help in data analysis, to do drug discovery, that would be in our domain. But if you're actually doing the biology of it, in the sense that you are, biology or chemistry of it, enzymes, proteins, etc., that's not our domain. And there's a whole lot of other things that are not our domain either. Another thing that is not our domain we get a lot of questions about is nonprofits. We don't do nonprofits. We're a for-profit accelerator. So that's just a little introduction. 1 million by 1 million. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these and many other kinds of programming. All right, let us go to the first question today. And that question is, what are the best bootstrapping techniques? Well, as you may know, if you've been following our work, we do an extensive amount of, bootstrapping-oriented methodology. In our way of building startups, bootstrapping features very, very big. Now, the way the industry operates today is also the bar to raise seed funding is actually higher and has gotten higher and higher. Seed investors want validated businesses. That's the bottom line, even the best accelerators that give you seed funding, like a Y Combinator, like a Techstars. They operate as equity funds. Their business model is an equity fund. And hence they too prefer validated businesses. And you're competing with entrepreneurs who have figured that out and have managed to get much further along than you would think. As a result, even to apply to a Y Combinator and Techstars, you should bootstrap first and then apply. That is our guidance. The three major bootstrapping techniques that we do a lot of work with are bootstrapping with a paycheck, bootstrapping using services, and bootstrapping by piggybacking. Bootstrapping with a paycheck is when you choose to keep your job and you start your company working nights and weekends, and you basically pay the bills off your job until the company starts generating money, which is going to take some time, right? You have to validate your business idea. You have to build a product. You have to sell that product. You have to get paid. That is not it's not an overnight process by any stretch of imagination. So you're going to have to, finance your runway for several, I would say, anywhere between 6, 9, 18, 24 months, because the more complex your product, the more engineering heavy your product, the more you're going to need time to build it. So that's bootstrapping with a paycheck. Bootstrapping using services is you bootstrap while you are selling services. So you go in the pain point that you are trying to build around, you go start getting clients who have the pain point and who are willing to pay you as a service contract to build a solution, and you negotiate keeping intellectual property in that scenario. So that's bootstrapping using services. We have case study after case study of both of these techniques. We actually have 2 books on each of these topics, 2 books on the topics, 1 each. And each of those are full of case studies. These are case study oriented books in the Entrepreneur Journey series. And then finally, bootstrapping by piggybacking is when you build your company on top of somebody else's platform. So platform as a service is a big trend in the software as a service world right now. So you can build a product on top of another platform like a Salesforce.com, like an Atlassian, like Shopify, so on and so forth, Twilio, and you can, basically you don't have to build all the stacks. The key is that building all the stacks is a very expensive proposition. If you don't build all the stacks, you can build it quickly. You can build your layer where you have your differentiated domain knowledge. Where you're innovating is important, right? If you're innovating on the application layer, there's no need to build all the bottom layers of infrastructure and platform and everything. You're better off just working on the application layer. And in that scenario, you have other platforms that you could potentially build on. Next question. Why is bootstrapping to exit important in the context of SaaS and PaaS? Bootstrapping to exit is a very interesting trend that I would like you to remember as you build your startup strategy. The main issue in bootstrapping with bootstrapping to exit that you have to keep in mind is that there are so many startups around the world right now. There are thousands and thousands of startups. Just in India there are probably 10,000 plus startups, and many of these are looking for exits. So let us think about a buyer, right? Let's say I am a buyer and I'm looking at your startup, and I'm also looking at another, 4 or 5 startups that have the same rough product in the market, and perhaps all of you have some product market fit. But your startup has raised already $20 million. And then I find one in that pool of 5 that has raised only $500,000 and has validated and has found product market fit. It's a good product, as good as your product, perhaps, maybe lacks a bit of features, but is a good product, and it's a good team. It is easier for me to bring in, as an acquirer, to bring in the company that has a small amount of funding or is bootstrapped, because it costs me a lot less. I don't need to satisfy investors who have already put in $20 million. And I have the channel. Maybe you have a few more customers than my little one. But the issue is that if I have to pay you, $100 million for your startup versus I can acquire the other one for, let's say $15 million, makes a huge difference. And I would probably, in that case, go for the one that I can acquire for $15 million. So what I just gave you is the perspective of the acquirer, which you need to keep in mind as you develop your exit strategy. And you should not build any startup without thinking through an exit strategy. And you should look at what is the, landscape, what's happening in the landscape. Are there other companies? Are there other funded companies who are making a lot of noise? And don't assume that just because there's a heavily funded company in that market, you could do that same product in a bootstrap capital efficient manner, and you would become, if you achieve product market fit, and if customers start buying your product, actually, if there's market awareness created by the other product, the other company, from the buyer's point of view, you are more attractive. Okay? So it's actually a much more subtle topic than what people think it is. So bootstrapping to exit, for people who are considering bootstrapping, is something worth taking advantage of. How can small startups take advantage of the PaaS trend? That's my next question. This is a, bootstrapping by piggybacking point. One of the most exciting trends in the technology industry currently is platform as a service and developer ecosystems. The company that has knocked the ball out of the park with their PaaS strategy is Salesforce.com. They launched their platform over a decade back, and many substantial companies and numerous sustainable small businesses have been built on it. Viva, for example, was built this way with a small amount of capital, and today boasts over $1 billion in revenue and over 20 billion in market cap. My hypothesis is that of the 200 plus SaaS companies that have achieved scale, we would see a set that would break out and become significant PaaS players. This means the industry would have 20 to 50 PaaS platforms with serious developer ecosystems and app marketplaces. The PaaS vendors would want to sell the apps developed on their platforms to their customer bases. Take 30% in platform commissions and help support robust businesses while scaling themselves exponentially. Entrepreneurs looking for capital efficient strategy should seriously consider bootstrapping by piggybacking on one of these PaaS players. And by the way, what I just discussed, the bootstrapping to an exit, also is a lot easier if you bootstrap on top of a PaaS platform, because very often the PaaS platform owners are acquiring from their ecosystems. So a good example is Atlassian. They are acquiring from their ecosystem. Salesforce also acquires from their ecosystem. A related question, which I've actually been answering, if you've paid attention, what is the best PaaS to use as a startup? So if you're a startup and you want to build cost efficiently, what PaaS should you build on? So that there's a thumb rule that you need to evaluate as you're choosing a PaaS to build on. You should choose one that has an entire tech stack, very good developer tools, great training, a great marketplace that through which you can acquire customers. This is very important. Look for the marketplace. An ecosystem accelerator. Ideally, you want an accelerator that is attached to the marketplace so that you can access, funding and mentoring and so forth, and a venture fund potentially. Some of these PaaS marketplaces are creating venture funds to go along with the ecosystem and funding companies within that ecosystem. And finally, this is very important, you need to choose a PaaS that is aligned with the domain in which you want to build a company. So if you're building in, let's say in the healthcare pharmaceutical space, if you're doing an IT product in the pharmaceutical space, see if Viva has something to offer. Viva has a product called Vault that is building on that's built on their own stack, and that they are considering opening up as a marketplace and as a developer ecosystem, as a platform, as a service. If you're going into that domain, they would have the best channel and potentially the best customer access. So you need to pay attention to the domain alignment of their customer base and yours and your target customer base. If you want to sell to IT, Atlassian is a good one. Atlassian, I have a very nice analysis of Atlassian. It's an article called Cloud Stocks. Atlassian fortifies its PaaS ecosystem. You can look at that. Within e-commerce, a phenomenal one is Shopify. You should definitely look at Shopify's marketplace. Salesforce, of course, we've talked a lot about it. So there's a lot of material on PaaS on the 1 million by 1 million website that you can look at. So let me actually give you some pointers to how to dig into the 1 million by 1 million website and find all this. Go to 1mby1m.com, go to the blog. And then you have a search box where you can search for whatever it is that you're looking for. There are a few pointers to things that you would find helpful. And within my blog, on the left navigation bar, there's this button called Entrepreneur Journeys. Entrepreneur Journeys is our case study series. We have case studies of entrepreneurs who have built companies, and you can go in there and study their case studies. For early stage entrepreneurs, I would recommend that you take, maybe half an hour or an hour out every day to read case studies. It will help you on many different fronts. It will help you learn. Obviously, you will learn how people have done it before, and you will learn, nuances, techniques, and so forth. The other thing it will do is that it will serve as a emotional, spiritual process of feeling inspired, feeling motivated. Because, what we have profiled in Entrepreneur Journeys is a series of entrepreneurs who have built something from nothing, and that journey is chronicled, one after another, after another, and that body of work is designed not just to educate but also to inspire. The way I came up with Entrepreneur Journeys was I had been in Silicon Valley for a long time. I moved to Silicon Valley in 1996. And because I am an MIT alumni, I managed to network my way into Silicon Valley rapidly through the MIT Alumni Association. And then, I raised a lot of, I spent many years raising funding. So I got networked into the venture capital ecosystem as a result of that, and so on and so forth. So by the time I started 1 million by 1 million in 2010, that was, I had already been in Silicon Valley for almost 15 years. I had a terrific network. And I had already started interviewing from my network entrepreneurs for the Entrepreneur Journey series back in 2006, not very long after I started writing the blog. So my idea was that, I have had the privilege of sitting down across many of these people and had coffee or had lunch and listened to their journeys, listened to their input on how they've done it, what wisdom they have acquired in that journey. And I thought, okay, well, if you're not an insider in Silicon Valley, you don't really have access to this kind of knowledge. And I really wanted to democratize that knowledge so that a broad, swath of entrepreneurs can have access to that knowledge. I call it tribal knowledge that floats in the air of Silicon Valley. And these days, some of this knowledge floats in the air of Bangalore, it floats in the air of Boston, it floats in the air of Seattle, in Austin, and so on. But around the world, I wanted everyone, every entrepreneur everywhere in the world to be able to access this knowledge. And that is the Entrepreneur Journeys series. We started in 2006, and today we have thousands of these case studies. We have 100+ unicorn case studies. We have hundreds of venture-funded startups. We have hundreds of bootstrap startups. So all this has helped us develop the 1 million by 1 million curriculum, which is a digital curriculum that, again, anyone, anywhere in the world can access. One more pointer, guys. Go to the 1mby1m.com website, go to the blog, do a search in the search box for Bootstrapping course. This will take you to a 1-hour course, and it's free. In it, I discuss a lot of these topics that came up today in a lot more depth. I discuss bootstrapping with a paycheck, I discuss bootstrapping by piggybacking, and so on and so forth. Quite a bit of, content. It's a very good overview of our philosophy of 1 million by 1 million. We are not trying to fund a million companies. A million companies cannot be funded. There are many more companies that are going to build as organically funded, customer-funded companies that are going to build $1 million, $2 million, $5 million, $10 million, $20 million businesses, and a small number that are going to be billion-dollar businesses that are in the domain of venture capital. But our domain is not just the domain of venture capital. Over 99% of entrepreneurs out there get rejected by VCs. They shouldn't all be seeking venture capital. Many of these entrepreneurs need to build their businesses by bootstrapping, and they would be successful. We are happy to teach you how to be successful in building a bootstrap business as well. So we don't only support the less than 1% that is going to raise venture capital. We are very happy to help you raise venture capital. I'll talk about the investor network and raising venture capital in a moment. But we also support the other 99%. We are the only accelerator that supports the other 99% of entrepreneurs who are not trying to raise venture capital. Please keep this in mind. Now, on fundraising, we have a terrific network of investors. Again, go to the blog and go to the seed capital section. You will see interview after interview of our investor community. We have a podcast series where we have investor interviews. We have on our YouTube channel investor interview after investor interview, because almost every week for our roundtables, investors come and participate in the mentoring sessions. So we do have a terrific network of hundreds of investors. And just like you're looking for product market fit, you are going to need to find investor entrepreneur fit. And that is a requirement to raise money. So just because we have 100, not 100, we have 300, let's say, investors that are part of our community, doesn't mean you can go to all those 300 investors. They have preferences, they have investment thesis, they have sector preferences, they have stage preferences, they have check size preferences, they have validation stage preferences, they have MRR preferences, they have ARR preferences, they have technology preferences. So you have to figure out which ones are good for you. And if that is not something you pay attention to, you're not going to be able to raise money. This is, this is the feedback that I give to all entrepreneurs who, hit me up for investor introductions. You're very welcome to join our 1M premium program, which is the program through which is our full acceleration program. It includes mentoring, it includes investor introductions, it includes the curriculum, and it also includes other kinds of introductions, whatever else that you decide you want or need from within our network. But you're going to have to be ready to introduce to investors before we can send you along. Now, if you put in the work, especially if you put in the work with us and you're ready to be introduced to investors, within 25 minutes, you can get introduced to 25 investors. Almost no one else, no other accelerator in the world has that kind of ability to introduce you to that many investors that quickly. And mostly because they are trying to fund you themselves, and they have small investor communities. Most accelerators, good accelerators, there are a lot of bad accelerators. Please don't join a bad accelerator. There are a lot of accelerators where the managers of those accelerators have never done a startup, have no idea how to build a company, and they've started an accelerator. They're basically bureaucrats. And you don't want to be mentored by bureaucrats. You want to be mentored by people who have done it before and who have the right caliber of networks. So, but the good ones should be able to introduce you to investors as well. And definitely, be careful about choosing the accelerator that you want to work with. I am out of time. I try to close these sessions at 8:30 a.m. Pacific time. But, you can ask questions in the public chat, in the comment section of whichever platform you're joining from, and I will come and dialogue with you after I close off the video portion of this session, okay? Thank you very much. If you want to bring your project to me to get feedback on specifically your project, come to a roundtable. On our website, you'll find free public roundtables. The schedule and registration links are there. That's where I do all the project-based mentoring. Thank you very much again for coming today, and I look forward to working with you soon. Bye.